The rand and local stocks are still up so far today as regulations to mitigate the U.S. banking crisis and boost global confidence continue. Petri Redelinghuys is the trader and founder of Herenya Capital. He joins us now to wade through the latest market moves. A very good afternoon to you, Petri. So the local exchange is holding on to gains from yesterday ahead of that interest rate decision. Talk to us about the latest moves.
Good afternoon, and thank you for having me. So yeah, I think generally the market is feeling relatively bullish. Our market has been outperforming somewhat over the last few months now, in fact, maybe even a bit longer. And it seems as though, at least from a trend following perspective, I can say, that I'm going to be quite brave and say that the bottom might be in for global markets at this stage. We do know that the market tends to lead the economic cycle by around 3 to 6 months. And they're starting, the makings of a bullish trend is starting to emerge. I think the Nasdaq, in fact, has now officially raised around 20% from its lows. So that is an official bull market territory, according to some of the older theories out there. And yeah, I mean, that theme's really starting to play into our market as well. Our market has been recovering relatively well. The question is really, there is still obviously a lot of fear around a potential, global slowdown and all these things. But, is the worst behind us? We've seen a lot of, banking collapses and all sorts of things. And I think what we have to say, and I mean, famous last words, right? This time is different. But, it really is a little different this time. This is not a systemic problem that's happening. This is basically a duration issue, right? So some of the smaller regional banks in the U.S., were just really foolish with how they were investing people's money. Essentially what happens is people put deposits with the bank has to pay them interest, and then they take those deposits and they buy, U.S. treasuries. So what they were doing is they were buying long-dated treasuries, 10, 20, 30-year treasuries, in a rising interest rate environment. So at some point they're not really earning enough interest to be able to pass it through, and they start taking losses. I mean, the solution to that is really just buy short-dated treasuries 3 months out rather than 10 or 20 or 30 years out. And that really should sort of be standard practice for banks. So the guys essentially messed up a little bit, and they were the smaller regional banks that did so. The larger banks seem to be obviously still quite robust as they do things a little more by the book, if you will. So I don't think that we have a real major systemic issue that's happening. And yes, of course, this is going to lead to higher regulation. Some people will complain, some people will welcome it. At the end of the day, the regulation is there to protect the consumer. We've seen that regulation post the 2008-2009 financial crisis really actually do a very good job. Some of it was rolled back, which led to the situation we're in now. So we'll go back to a more regulated environment, which is fine. And then, essentially it seems as though the world is starting to recover. What is interesting, and I think that not a lot of people are talking about yet, yesterday, a deal was, an LNG gas deal was done for, I can't remember how much. I mean, it was a couple of millions of tons of LNG gas being imported into China. And that transaction was actually settled in Chinese yuan or renminbi. This is an onshore and offshore version of it. So let's just say it was settled in yuan, which is interesting because it is the first of its kind transaction in energy, be either LNG or oil, that's being not settled in dollars. Yeah. So that, if you are, anything like me, I suppose, you start seeing that the US dollar is losing a little bit of power. And we might be seeing the end of an era here. And I mean, it's a slow process. It's going to take 20, 30, 50 years. But it seems that Western dominance over the energy world and the petrodollar, the writing is on the wall.
Sure, that de-dollarization conversation rages on, I guess, in light of that development. Thank you for that. Let's come back home and take a look at news from the Reserve Bank. We are expecting that they will be either hiking or holding interest rates. Some pundits are pointing to a 25 basis point increase. Apart from the hike, what are you looking forward to in terms of the forecast on inflation and economic growth prospects in the country?
I'm not looking forward to much that the Reserve Bank is going to say, I'll be honest with you. I do think I'm in the camp of about a 25 basis point rate hike. I think that they have to follow suit. We kind of act in lockstep with the rest of the world. The risk is if we don't raise our interest rates, then our government bonds become less attractive to international investors, and we see capital flight into higher interest rate markets, where that carry trade is a bit more appealing, or people just take their money back to the US or developed markets where, from whence it came. So we do need to, keep pace with international central banks in order to essentially ensure that we can continue to attract foreign investment, at least into our government bond sector or into government bonds. So I think that we probably see 25 basis point rate hike, nothing sort of out of the ordinary there. And the reason I say I'm not really looking forward to it is because, what do we expect from them from a economic forecast perspective? Well, we know what they're going to say. Load shedding is a massive problem and we need to fix it. It's causing, enormous amounts of economic damage. I mean, we know these things, right? Mm-hmm. Unemployment is still a problem. And I don't see that there have been any real structural or macro changes to improve any of those things, right? I mean, the only thing that we can really say is that there is an enormous opportunity in the solar industry, and that could create some jobs, but everything else is suffering. I think what we are starting to see is not only individuals, but also businesses are taking the necessary steps to become independent of government, I suppose, for reliance on energy and soon enough clean water as well. So, that is, I think, a positive, and I think in the next 5 to 10 years, the Eskom problem will be largely a thing of the past. Not because Eskom has sorted out their problems, but mostly because the rest of us have gotten along with it and made another plan, So I think that is, generally a positive. But in the short term, I don't see that there's going to be much good news out there. I mean, we've had challenges with energy, and we continue to have challenges with energy, and this is particularly the Eskom issue. And until I think that's resolved, there's not going to be a lot of positivity to be found. Maybe I'm being a bit pessimistic. I guess we'll see.
Or maybe you're being realistic. Okay, let's take a look at the Financial Sector Conduct Authority. They've cancelled 6,757 inactive retirement funds. What's going on?
Right. So this started in 2007, I believe, and it's been a bit of a battle back and forth, and they were sued and countersued and a whole bunch of things. But essentially what they do is obviously they monitor FSPs relatively closely, and there are requirements for FSPs to submit annual, audited financial statements and all sorts of other required reporting that we must do to the FSCA on an annual basis. So what they noticed back in 2007 is that there were at the time just over 10,000 registered, pension funds and long-term investment funds, particularly in the pension space, and they only received returns or financial statements for about 4,700 of them, which obviously is worrisome. So upon further investigation, they found that 6,700 of these funds basically have zero assets, zero clients, and in some cases not, a proper board structure to administer and run the funds. So essentially these things are doing nothing. They're registered, they're dormant, there's no money in them, clients in them, there's no one running them. They're just these sort of shells of either, abandoned projects or funds that have ceased operation at some point. And, it took them a while to get it done. Obviously, there was a little bit of pushback from some people. I mean, fund licenses are not easy to get, I can assure you. So those that had the fund licenses probably thought, well, look, they're dormant for now. Maybe in future we'll find a use for this fund, but, let's keep it open and not close it so that, if we do need it at some point in future, we can just sort of plug and play and get going. And the FSCA said, well, look, these things have been dormant for a very long time. There's no point in having them open anymore. We're going to deregister them. So, I don't think it's an alarming move or anything like that. I think it makes sense. I have 6,750 some odd, pension funds that are basically doing nothing. They're not generating any revenue. They don't have any clients. So you may as well deregister them. And if you want a fund, come and apply for a new one.
Yeah. Okay, H&M reported a surprise operating profit for the December-February period, despite consumers curbing spending amid soaring inflation and a delayed spring. Talk to us about their numbers.
So I think we first have to, understand H&M. I think they've got 4,400 and something, call it 4,500 stores all over the world, right? So this is a very big business. I mean, they compete with the likes of Shein and those things. And obviously those, very trendy, fast-growing online retailers have been taking a little bit of market share from them, which has forced the likes of H&M to relook at the way they do things, do a bit of cost-cutting exercises, do a bit of right-sizing and that kind of thing, and really try to, regain some of the margin that they make. So they're targeting to make a 10% margin on revenue, which isn't actually all that much, but for a big, multinational mega corporate, it's not too bad either, right? Anyway, what is surprising here is that, from a global perspective, like I mentioned earlier, there's a lot of fear, a lot of global recession talk, a lot of consumer under pressure talk, a lot of, credit card debt in the US, for example. So there's all these, dark clouds that are hanging over our heads. And yet, fashion retailers are actually starting to recover, right?
Yeah.
So and this is, again, maybe a sign that the market tends to lead the economic cycle a little bit, because what we're seeing in the market is we're seeing that companies that are driven by discretionary consumer spending are actually starting to do a little bit better and starting to recover somewhat. I mean, we had the lockdown period, which was obviously bad for everyone, then a very sharp recovery after that when they let us all out the cage again. And then things started to slow down as the, reality of our economic situation kicked in and interest rates start going up and, life gets a bit more challenging. And now it seems that recovery is once again starting, and that we might go back to a sort of global growth situation.
Listen, they say don't look like your problem, so you might as well look good while also going through the most. Alibaba is looking to monetize its non-core assets in order to reinvent itself after a regulatory crackdown that wiped at 70% off its shares. What's the latest on that front?
So this is also a story that we know has been topical for a while now. I mean, it affects Tencent, Alibaba, JD Group, those guys, big mega tech companies in China. China doesn't like companies to become too powerful without essentially their government being able to, understand everything that happens in the business and to sometimes have the final say on some decisions. I mean, you can see this in the gaming industry. You have to get a license to publish a video game, right? And that's after kind of, the Chinese government has made sure that it has enough, no propaganda in it, as well as, no violence, no gambling, whatever the various requirements are that they might have. So that regulatory crackdown has really been bad for profits and for share prices of these mega tech companies from, the Chinese mainland. So in order to do that, in order to sort of avoid the pain that these companies are feeling, what they're starting to do is they're starting to restructure themselves in a way that they can essentially work around the regulation, comply with it in many spaces, and they're starting to break themselves into smaller pieces because, they're essentially too large. So what Alibaba is going to be doing is creating 6 different business units. This is a process they started some time ago. 6 different individual business units, each with its own board, each with its own CEO, and they are going to change Alibaba essentially into a holding company structure. And they say things like, look, if any of these 6 different business units at some point need funding or need to do a capital raise, they can independently go to the market and list themselves, essentially starting to unbundle the Alibaba group into smaller pieces, which, some analysts say creates a lot of value for shareholders.
Thank you so much, Petri. Good to see you. Petri Redelinghuys is the trader and founder of Herenya Capital Advisors.